Welcome back. Well, we're putting the spotlight on the e-commerce space. JM Financial Institutional Securities has recently done an in-depth study. They've come out with a note, and they believe that the Indian e-commerce space is at a very critical inflection point right now, and that at least some of the trends in terms of penetration might be seeing a bit of a plateau for big-ticket items like electronics and mobiles, whereas things like groceries, small-ticket purchases, they are really taking off on the online medium. Now, what does all of this mean for listed companies, and what should investors be looking at now? We have Sachin and Dixit of JM Financial joining in. Sachin, good to have you on the show. So it's a very exhaustive note that you folks have put together. And it's very clear that the path to profitability trend is intact. We've seen that, in a Zomato, in a PB Fintech. These companies have really started up showing financials. Now, the question is, what are the next triggers? Because the stocks have also moved up. Zomato, for instance, is up, I was just looking at it, I think, almost 200% in the last 1 year. We'll just pull up a chart of Zomato. PB Fintech has done well. So the question is that what are the next triggers? Sachin.
Sure. So I think what is happening here is that in terms of large ticket items that we were talking about, right, they're thankfully a lot of the companies that cater to those large ticket items are not really listed in India. When we think of the listed companies, like you mentioned, the Zomato and PB Fintechs, right, there even today, the online penetration in these categories is relatively low, which is what we have tried to highlight here. That the large ticket items, maybe they are plateauing, like when you think of mobiles or even something like large electronics, as you think of it. What we noted that there is certain plateau that's happening, and that's happening, one, because discounts and return policies for the e-commerce players have been a bit more restrictive, while on the counter side, offline players have started playing a bigger role there. They are like meeting the discounts and trying to come up with same sort of inventory, as well as exclusive launches they are trying to cater to. So that's what they have done on that piece. When you think of categories where Zomato is catering, in fact, we are surprised to see that most of the consumers were highlighting that they did not expect that quick commerce, which is what the Blinkit side of Zomato is, has ramped up how well that it has. Like initially, they were very apprehensive of getting onto quick commerce, of thinking like, do we really need these groceries or the new items that they're getting to so quickly? And that is the surprising piece. When you think of PB Fintech, I think what's happening there, that insurance in India is a very sort of under-penetrated category, whether you think of broadly that under-penetration happening. When you think of online penetration there, that's even lower. It's only like a 1 to 2% online penetration that we have in insurance. So thankfully for these listed names, the runway to growth is still far ahead.
Okay. Let's talk about, one particular, topic, and that's the offline fighting back. The online, these e-commerce companies have grown by largely deep discounting, by getting access to the newer launches, more variety. But now you've seen that the offline players are also clawing back. They're offering those same kind of a discounts. And they're trying to hold on to their market share. So tell us, what is the anecdotal evidence that you've seen on the fight back from the offline players and becoming more competitive?
Yeah, so what you see, like when you think of large electronics, like that's one category where we have seen that there is immense sort of clawing back happening from offline. Right. What we have seen is that when you go to an offline store, and this we checked by sending some of our representatives there as well. When you go to an offline store, the list price will generally be much higher than what an online list price will be. But once you have sort of declared or convinced the salesperson of your interest in shopping, then they will come up with certain plans, certain offers, which will ensure that the price more or less matches up to online. It's not better than online yet, but it tries to match up. Secondly, what happens is when you think from consumers' perspective and who are trying to shop for large electronics, let's say a refrigerator or a TV, where returns are not really there on online, right? Earlier, when the early days of e-commerce, even these categories, there were potential returns. Now, returns are not there unless there is a defect with the product. In that case, what the consumer is doing is the consumer anyways need to go offline to ensure that what they are ordering is certainly what they want. Now, what they are doing is, because offline is also giving them almost on par prices, they are trying to do it there. Similarly, if you look at another category which we have highlighted in the report, which is basically pharmacy. Pharmacy, obviously, there were issues with regards to people ordering acute categories, where obviously your demand is immediate. You cannot wait for 30 minutes or even an hour in some cases. While deliveries in most cases were same day, later in the day, or next. So what is happening there is, again, their chemists have now started giving you discounts. Most chemists are willing to pass on 10-15% discount, which is not which is again lower than the online place, but relatively it's not too much of a difference, especially
Sachin,
looking at the value proposition that they're serving.
Sachin, absolutely take your point. I think offline retailers, brick and mortar retailers, they really up their game to try and meet the challenge that online kind of put forth. We've seen that happen all around. So we're coming down to the last 2 minutes of the conversation. So let's just talk about stocks and what investors in the listed universe now should look out for. Like I said, a stock like Zomato has already rallied 200%. So how are you looking at valuation multiples? I mean, we started off by looking at these companies only on a price to sales basis because there was no profit, but now there is profit. So just give us the sense on valuations for a PB Fintech and a Zomato, and also Nykaa. Could Nykaa be a dark horse because it's not underperformed? But then there's a lot of disruption in the beauty and personal care space. There's lots of competition, new retailers coming in, online, offline retailers. And then, of course, Nykaa had its tryst with fashion, which is already a cluttered space. So just give us your sense on the three listed plays.
Right, sure. So I think among these three, what we have seen is that the two names that you highlighted first, Zomato and PB Fintech, they have done very well. And how they have done very well is effectively that the companies have started putting out strong guidances. And they have proven that on the numbers, quarter on quarter, they have beaten those guidance or have met those guidance, most likely beaten them. So that's where the investors are willing to basically appreciate the new narrative of profitability that has come up with these companies. And they have rewarded the same. What is happening for a Nykaa during the same period is like Nykaa, if you will notice, like it has not done too much. It has tried to bounce back from the lows that it made, but then it has been somewhere in the range only. On this name, I think there has been certain sort of discretionary environment that has changed over the last 4 to 6 quarters that we have seen across categories in India, which is making some impact to Nykaa. What we certainly have started to believe over time, and this we have also highlighted in the report, is basically that the competition-wise, Nykaa seems much more secure today than it was maybe 6 to 8 months back. Initially, when some of the other large conglomerates in India ventured into beauty as a category in terms of online, they made a lot of noise, and Nykaa stock got some punishment for that there is incremental competition coming into the category. What we are seeing at the competition is now a bit more mellow. Maybe because of the discretionary environment being tough, they have tried to take a backseat. And once this discretionary environment bounce back, Nykaa should be a big beneficiary of it.
We leave the conversation here for now. Thank you very much for joining in. We'll get into a break on that note. We'll come